Thank you for joining us on another episode of the Dealmaker Series. Today, I am joined by private equity and VC partner Chauncey Lane of Holland Knight. Chauncey, thank you for being with us today. Tell us about yourself and tell us a little bit about the firm.
Thanks, James. Glad to be here. As you mentioned, I'm a private equity and venture capital partner at the law firm of Holland Knight, based in the firm's Dallas office. Holland Knight is a 2,000 plus lawyer strong firm providing a broad scope of services across a number of different practice areas and industries. Personally, I practice primarily in the technology and financial services industries, but I've got a number of M&A colleagues around the firm across our 35 plus offices where we touch just about every industry out there.
Awesome. I didn't quite know you were that big, so that's good to know. So let's jump right into it. What are you seeing as far as deal velocity now here in Q1? Are we moving up, down, or sideways?
Yeah, I think we're definitely moving up, right? I think near the end of 2025, we saw a resurgence in the M&A market. And driven by a number of different factors that I'm sure we'll talk about during the course of our conversation. But yeah, the end of 2025 saw a resurgence of the M&A market, and we're very optimistic that that resurgence is going to continue into 2026, right? What we're starting to see now is kind of that the upper tier of the M&A market is really kind of opening up. Mega deals are rolling out, so seeing a much greater flow of mega deals coming. The mid-market is thriving, it's growing, and I think we expect it to just continue to grow as we go through the year.
Yeah, I've seen a few different publications around estimates for this year that are putting the number for deals as far as volume and value comparable or above 2021. Are you confident in that as well? What are you thinking about for 26?
Yeah, look, I think we're all kind of looking into our crystal ball, and I think what you just described is kind of directionally where it appears we're going. I think 2025 was kind of the second largest year for the M&A market, and I think that 2026 is certainly on track to be a banner year and possibly even exceeding what we saw in 2021. I think that's kind of what the crystal ball predictions are. And certainly as a deal lawyer, I'm very hopeful that that's true.
Yeah, as am I. So what about structure-wise? Any particular structures you're seeing emerge here in the last few months, or is it more the same?
Yeah, I think it's more the same, right? I mean, you're seeing asset deals, you're seeing stock deals. SpaceX just announced that it acquired its affiliate XAI, and that was a stock-for-stock transaction. So I'm not seeing any necessarily kind of emerging transaction structures, more of the same that's taking place than what we've seen.
So last year, I interviewed a lot of people, as you know, and it seemed that the theme was pretty heavy on all kinds of hedging mechanisms where you had higher equity rollovers and you had more earnout activity. Are you saying there's still about the same, or is it kind of reducing that a little bit, or what are you seeing?
Yeah, I think it's really about the same, right? I think, particularly when you talk about earnouts, right? It's the way that you bridge valuation gaps between buyers and sellers. And I think as long as we have some of these economic forces still impacting the M&A market, I think you'll continue to see things like earnouts play a role in how M&A transactions are getting done, right? When we think about high inflationary concerns and you think high interest rates and those types of considerations still playing a bit of a factor. And as long as they are, I think you'll see different things like earnouts stay around.
Is there a structure that you're finding is maybe easier to work with, or that maybe buyers or investors are favoring?
Asset deals tend to always be kind of the driving force around many of the different deals that I work on. Gives the buyer the ability to pull out the assets and separate the assets from any attendant liabilities that those assets may have been previously associated with. So seeing asset deals still kind of be the preference, and there's various tax reasons why a buyer may prefer an asset deal over a stock deal. But in some instances, a stock deal is the right way to go. I'm still seeing deals with earnouts, as I mentioned. I think earnouts have pros and cons to them. And so I think used in the right way, structured into a transaction appropriately, can be a great tool for buyers and sellers. So definitely seeing earnouts still play a bit of a role in how M&A deals are getting done.
Okay, very good. And what about industry or sector-wise? Are you seeing any particular trends there, maybe here in DFW or nationwide or anything like that?
Yeah, I think broadly, globally, we're seeing technology out front, largely with the implementation and adaptation of AI. And so as a result, I think that's fueling a bit of a demand for M&A deals within the tech industry as companies look to capitalize on AI, acquire assets that bring AI onto the platform. Seeing a lot of activity in the technology sector. Media and telecom also very dominant right now. And so seeing a lot of activity in those spaces. Again, AI is playing a bit of a role in media and telecom as well. And so then after that, I think you got energy, which has been strong for quite a while, and I think energy continues to be strong, particularly with the resurgence of data centers playing a role in that market right now. So energy very, very strong. Life sciences continues to be strong as well. And so seeing a lot of activity in the life sciences space as well.
That's interesting. You mentioned a few different sectors that I'm watching as well, and that I'm actually curating some events around this year. You mentioned life sciences in particular. Are you seeing that across the nation or globally, or what about as far as DFW?
Yeah, and honestly, maybe not so much in DFW. I would say more on a national scale when it comes to a lot of the interest around life sciences, different types of therapies and things like that, I think are really kind of taking off. I think there was a lot of research and effort being done, particularly during the pandemic year and even in smaller, quieter M&A markets. I think that research still happening behind the scenes. And so when the market fundamentals align, I think that research is ready to come to market. And you're seeing a lot of people jump on that research and really try to monetize it.
And you mentioned, I guess, broadly critical infrastructure. You said specifically data centers and energy. What are you seeing there? I'm curious.
Yeah, widespread interest in data centers from a number of different parts of the M&A community, right? I mean, I think there are a number of different aspects to a data center transaction. So you got a lot of players really finding interest in that space. And given the very high demand for energy around those, it's really piquing M&A activity in the energy industry as you try to bring together the resources necessary to fuel a data center. And I'm seeing that even here in the DFW area, in the state of Texas, and nationally. I'm seeing a lot of activity around data centers. And so I think that interest, that activity will continue and will only continue to kind of serve that resurgence of the M&A space in the energy sector.
Yeah, I agree. I know that we're number 2 last I saw in the country. Here in DFW, we're number 2 for the market for data centers. I think we're number 3 in the world. So yeah, I'm also expecting that to continue, probably exponentially, honestly. What about economic forces? You mentioned this a moment ago. What economic forces are you seeing currently impact deals?
Yeah, interest rates, right? Interest rates are king. Interest rates have been around for a number of years in terms of being a concern with respect to the impact they're having on the M&A market. And so we saw just recently the Fed's recent decision on interest rates. And so interest rates continue to play a bit of a role in how different parties think about one, financing an M&A transaction and whether the timing's right to execute on an M&A strategy. We're kind of in this post-globalization environment right now that I think is also driving a lot of companies to think about their strategy, how they get close to their customers, how they execute on their strategy for revenue growth, for particularly those companies who are government contractors. It's key to their strategy right now, right? As you see things like protectionism on the rise with tariffs and different things like that, I think companies have to be very strategic about the timing of an M&A transaction and thinking about how that M&A strategy impacts their broader strategy in this post-globalization environment. And so I think we're seeing a lot of that. And then of course you got the fact that private equity is sitting on a lot of dry powder, have been for a while. And so as some of these economic factors start to shift and interest rates stabilize and start to even come down, I think you'll see private equity jump off the sidelines and really become more active. And we're already seeing that, right? There are some spaces where assets, the values have been fairly steady, right? So I haven't really seen much of a slowdown in that space. When you think about HVAC roll-ups and some of these other professional services roll-ups, that has been a thriving market and continues to be, not very cyclical. So I think you're seeing a lot of interest there. In fact, I saw a lot of private equity turn to that sector as interest rates and inflation became a concern, because I think it was a little bit less of a concern in some of those more professional services type sectors.
Yeah, for sure. I think you're right on the money. I think there's been a lot of reshoring. I think there's going to continue to be a good amount of reshoring as well. And to your point about, like last year, it seemed like the theme was all about dry powder because there's so much capital sitting on the sidelines to the tune of, I think, $1 trillion or more. Which is also interesting because a lot of money, I think, is still tied up from 2020, and we're in 26 now. I mean, the vintage is it's pretty ripe, I would say.
Yeah.
I think they've got to start putting capital to work, don't you think?
Yeah, no, completely agree, right? And I think that will certainly be a factor that we'll see play out in 2026 when it comes to the resurgence of the M&A market is hold periods, right? I mean, a lot of these assets have been held for about as long as that private equity firm can hold it. So they've got to find a way. One, you're getting pressure from LPs who have been wanting liquidity for a number of years,
Yeah.
and then you get up against a hold period. So private equity has to strategically think about how they offload that asset, and you want to time the market correctly when you do that, right? So ideally, you're not forced to offload it. You offload it when the market is timed correctly, so that you can maximize the value for that disposition of that asset.
Yeah, for sure. Very difficult here in the last year as well. I think it might be just as difficult in this year. All right, last question, and you mentioned the crystal ball a couple of times, so let's keep that theme on this one. I know you mentioned a lot of forward-looking things, but what do you see coming next, broadly or really specific, in these next 12 to 18 months?
Yeah, look, my crystal ball tells me the M&A market is going to continue to grow, right? I think we saw significant growth in the M&A market last year. I think that will continue into 2026 across a number of different parts of the M&A market, including the SPAC market. The SPAC market had a great resurgence last year after having a couple of down years, and I suspect the SPAC market will continue to stay strong. As you've got emerging technologies that are really looking to tap into the public markets, and the SPAC SPAC process being a fairly efficient way to do that as long as the economics hold firm. So I think we'll continue to see that happening across various different aspects of the M&A market. I'm excited about it. I'm looking forward to it, and I'll be right there playing a big part in that resurgence.
Absolutely. Chauncey Lane, we appreciate your insights on this one. I like a lot of what you said. For those of you guys watching, hopefully this is as useful for you as it is for me. To find more episodes of the Dealmaker series, follow me on YouTube or LinkedIn. Chauncey, I appreciate you again, sir.
Thanks, James. Glad to be here.